argued that you do not borrow your way out of a debt crisis. And so while 1 month's borrowing figures, a £600 million deficit for July, may not demonstrate that everything has gone haywire, politically it is bad news for the government and in particular for the Chancellor George Osborne. Newsnight has heard rumblings in Whitehall that new spending cuts are being considered for the autumn. We'll explore the Chancellor's options in a moment. First, here's David Grossman with the extent of the problem.
Very carefully, the Chancellor plotted a route out of deficit. Unfortunately, the journey time has already had to be revised upwards once, and now he's in danger of having to do it again. The latest figures show that the government borrowed £600 million last month. That is up £3.4 billion on the same month last year. Then there was a surplus of £4.2 billion. Normally, in fact in all but 2 of the last 50 years, July has been a banker of a month for the Treasury, when they can expect to be in surplus because of income and corporate tax receipts. In July, this didn't happen.
Corporation tax receipts so far this year have been going particularly slowly relative to what the OBR was expecting back in March. And today we saw the second of 4 large instalments of that particular tax for this year. Corporation tax receipts reflect the profitability of companies in the UK, and in particular the July receipts reflect the first payment on profits for 2012, which suggests that companies are much less profitable this year than the OBR was expecting.
Another factor was the closure of the Elgin gas field, leading to lower than expected revenues from the North Sea.
Well, they do certainly show that there are many challenges out there for the UK economy. They are difficult figures, but I think what they also show is just how important it is to stick to the plan to deal responsibly with Britain's debts, and indeed not to add more to that. So if you look actually into the figures, what you see driving them, I think, is a decrease in tax receipts, mainly corporation tax, with an interesting factor there in the North Sea. But as I say, I think what these figures really show is the importance of sticking to the plan that this government has set out.
The Treasury has a feeling of great solidity about it, but when it comes to the numbers upon which it bases government policy, well, a little more spongy. It's a notable feature of this recession that almost every set of government projections with time begins to look like the work of a wild-eyed optimist.
For example, back in June 2010, the Office for Budget Responsibility forecast that for the current year we'd be borrowing £89 billion. That was revised up in March 2011 to £101 billion, and by March 2012 that forecast had gone up again to £120 billion. And that could still be optimism, because for the first 3 months of this year we're already about £10 billion behind where we should be, suggesting to some that we could be looking at a total deficit for the year of £160 billion, or about 80% higher than the 2010 initial forecast.
Well, these are really serious figures, and they suggest that the central goal of George Osborne to reduce the deficit has not just not happened, it's actually going the wrong way. He's actually adding to the deficit. These borrowing figures are going higher, and it's because he's driven us back into recession, and we've got such expensive costs of welfare benefits, keeping people on the dole rather than seeing them in work, and paying money back into the exchequer. It's a total failure of George Osborne's plan, and he needs to change course right now.
So what happens now? Well, in these febrile economic times, the political rumour mill is in overdrive. A little while back it was George Osborne's going to lose his job. Now, Newsnight hears rumblings that the Treasury has ordered new government cuts, every department to do their share for an emergency budget statement in the autumn. That may turn out to be nonsense, but what is true is that the politics of this get harder and harder for the government.
Some Conservatives, for example, point out that the Chancellor hasn't even started down the road of cutting total government spending, which has actually increased.
There have been some individual areas where there have been some difficult and painful cuts, but overall there's been a big expansion of public spending in cash terms and an increase every year in real terms. And I think we have to accept that for a bit we can't have real increases in spending. We've got to try and keep it under better control, and we've got to renew our attack upon the costs of government itself, because that would be the most popular way of doing it.
Government is deliberately pursuing policies which are raising energy costs, for example. It's somewhat watered down its proposals for planning liberalisation. It's not moving very rapidly as far as labour market liberalisation is concerned. Indeed, it's actually imposed a lot of new labour market regulation upon employers. And yes, it does need to take a close look at those policies and reverse them.
So, how much longer will the journey time back to budget surplus be? And crucially, is the Chancellor going to have to step on the accelerator?
David Grossman, well, no one from the Treasury team was available to come on the programme tonight, though we did ask. We do have a couple of fine economic minds with us. Jonathan Portes is director of the think tank, the National Institute of Economic and Social Research, and John Moulton is chairman of the investment company Better Capital and is a former Conservative Party donor. I just wondered what you thought of these borrowing figures.
They were worrying, very genuinely worrying. 26% ahead of where we expected to be 4 months into the year. Looks like we're heading back to the levels of deficit that we had in 2009.
Could be a blip, I suppose.
Yeah, it's a bit of a big blip, though, and actually a lot of damage being done. All kinds of things are not working out as hoped. Basically, the Chancellor started off this government betting on growth and no actual cuts to get rid of the deficit. The growth was never likely to happen, hasn't happened, and so we're just stacking up more and more debt. The issue which nobody's very comfortable about is how long we can carry on stacking that debt up.
What do you make of the figures?
Well, I think, as the Treasury Secretary said, that they are volatile from month to month. But the underlying picture is this is what you would expect when the economy is, as John just said, roughly flat. We have had essentially no growth for the last 18 months. I think where I would differ with John, though, is that I think that is at least in part a direct result of over-rapid fiscal consolidation. Unnecessary cuts to the deficit too quickly have actually been one of the reasons why we have no growth, and that in turn, of course, has meant the deficit hasn't come down as quickly as the Chancellor had hoped.
Let's look at possibly fairly simplistic terms at the two of the big possibilities. One is, I mean, is there scope, because borrowing costs are fairly low, to borrow even more and have a big stimulus? Well, do you think that would work?
That's clearly possible. I mean, remember that...
Advisable?
Well, both... One thing we do know is when we listen to both what John says, with respect, but also to what the Treasury ministers say, is that 2 years ago they said that if we went on borrowing as we were, interest rates would soar, the credit rating agencies would downgrade us, we'd have to call on the IMF, the gilts market would panic. We'd heard all of that. What happened? We are now borrowing more than was forecast before the Chancellor introduced the fiscal consolidation programme. Not less, but more. And what has happened? Well, interest rates compared to where they are 2 years now, are considerably lower than they were 2 years ago. We can afford to borrow more, and we should.
Don't disagree with you, using that nice phrase with respect. The reality is we don't know when foreign investors in gilts will panic. We don't know when interest rates go out of control. We've tested all kinds of things in the economy with masses of quantitative easing, very loose credit, running a large deficit. Nobody knows where that ends, except that it must end in higher interest rates and it must end in inflation, maybe years away. And you may be right that in a year or two you can get away with spending and trying to stimulate your way out of it. Whatever you do, though, if you do that, remember what you're doing is actually quite immoral. You are living better today at the expense of the people who follow us. So it may give rise to less pain in the short term, but what it does is not good for the next generation.
I think that's actually, I think, quite wrong, actually. Borrowing now is not borrowing from our children. We borrow from ourselves. Debt is financed now. You can't borrow from your unborn children. What we would do now by borrowing is enable us to invest in things that will actually be good for our children. Getting jobs for young people, building roads and bridges, building schools.
Well, great if that's what the money's used for, but of course it by no means always is used for such useful things. And absolutely you're borrowing from your kids. You have no intention of repaying the principal. You have no intention of paying the interest.
Okay,
they will.
John, what's the alternative? I mean, we've heard
the alternative's
more cuts, basically.
Basically, carrying on as we are isn't going to cut it. This sort of muddling through isn't going to achieve what the Conservatives need to do by the next election, get some signs of growth in the economy. And actually, they're going to either have to lurch in one of two directions. They've either got to go for more stimulus, that side of the table, or this side of the table you go the other way, which is the John Redwood approach, which is to actually cut expenditure, to actually take more pain short term in return for getting a better economy medium to long term. It's been done some places on earth, done quite successfully, even in the UK in some previous recessions and cycles. The state is too large. The state, the size it is, means we have low growth baked in.
OK, but if the Chancellor were to decide to go down that route, it would take a degree of political courage, because it would be pretty nasty
medicine. It would take a lot of courage.
He is, according to an ITV News poll tonight, 16% effectively saying he's doing OK, 62% saying he's not. It's kind of difficult when you're in this bigger political hole to take those strong economic decisions, and I know Jonathan disagrees with taking them anyway.
Just take the general view. It can't get much worse. He might as well have a go.
Can I make 2 points? First of all, previous recessions, I was actually working for a Conservative Chancellor in the Treasury in 1992. And Norman Lamont took the right decision. He said very explicitly, we do need to make savings, we do need to cut spending and raise taxes to get the budget back to balance, but we're not going to do it right now. We're not going to do it until the economy starts recovering. And the fiscal tightening then did not begin until 1994, after the economy was clearly on an upward trajectory. That is basic economics, and that is what the Chancellor should have done now.
The basic economics of the same period, basically during the 1990s we took 7% out the size of the state, and the economy grew at pushing 3% for 10 years. Boy, would that be a nice outcome now.
OK, we'll leave it there on that happy note. Now, the Republican